On the call this morning, for the first time since her tragic shooting, Congresswoman Giffords returns to Washington to cast her vote, helping the House pass the debt ceiling plan. The Senate is scheduled to vote today at noon, and the bill is expected to pass. S&P futures are down 0.5% on recent weak U.S. economic data, from sluggish GDP growth to disappointing manufacturing figures. And gold is near all-time highs, while overseas markets sell off as investors seek protection from slowing global growth. I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Scott, let's get to it. It was a tough day yesterday. The markets gave up Monday's early morning rally pretty quickly at their terrible ISM number. I called it, though. I do have to say it. I was very skeptical of the rally going into yesterday, and the debt ceiling deal is behind us, but now it's really about growth. How do you handle today when the futures are already down?
Well, it's tough coming into today because we are now down about 7 days in a row, working on our 8th. We've been seeing technical signs add up. Yesterday, your attitude was awesome. You came in, you hated Washington, you hated politics.
I was negative.
Why are we up 14 handles? I'm like, let's just see. You know, as professionals, we said you never chasing up open like we had yesterday. Most traders actually tried to fade it to test the strength. And those who faded or got short, they were even surprised how fast we came down. And if you do the right thing, you get rewarded. So they got rewarded for being short. And those with the right set of rules who didn't buy yesterday's up open also, got rewarded by not chasing. And we talked about, if you were uncomfortable during the market decline like last Friday, take this opportunity to sell.
And if you miss that opportunity to sell now because we're already opening down, would you be adding to a short, or do you need to stay in cash? Like, what is the chart telling you and how you need to trade? Well,
you have to look at this pattern because the pattern that is developing right now is very bearish. We've talked about this head and shoulders top pattern that has not triggered over the course of the past few years. Every single time the neckline looks like it's going to break, the PPT saves a day or a QE2. But right now, all of that's off the table. So right now, you have to be very careful. This is a very bearish environment. If you take a look at the chart, you'll see what I'm talking about. Here is that head and shoulders top. This is the left shoulder, the head, the right shoulder. Just so you know, on this day, this was, I believe, July 27th, this was the distribution day that put us back in correction mode. So even if you didn't follow this pattern, this 13.15 was your exit out of stocks, right around this area. If you did so, you saved yourself 2%. Now, look at the neckline we're coming up to. Okay, this is the neckline. It stands around 1270-ish. If we break through here with volume and close below, first move could be 1220. You have some points along the way, but this is a very, very bearish pattern.
I was going to say, does that mean that we're in a bearish mode if we do break that 1250 level that has held the last couple times?
Well, we've been in a bearish mode for the past week. We're down 7 days. It all depends your time frame. A lot of people say, what do I do in market corrections? We talked about this. I want you to be in cash, I want you to be short, or I want you just to be comfortable not doing anything. There's nowhere your money has to be except in the bank and be safe. I like to buy the best stocks at the right time, and right now we are in a market correction and it can intensify. I want to show you this chart one more time. These are the levels to watch. If we break, which we're opening below this 1274 area, you have this congestion here, which is around 1265. If this area doesn't hold, you have the Japanese crisis low here at around 1249. We're a stone throw away from all these levels, and we have everything brewing right now. It's almost like the perfect storm where you have fundamental problems. You have slowing growth in the economy. We have a jobs number coming Friday. You have headlines out of Europe.
Yeah.
You have all these things piling up, and the technicals are actually saying that we could go lower as well, besides all the headlines.
So really quick though, so if you're in cash now, but then if we do go below that 1250 level, would you be then shorting for the next 20, 30 points, or you have to see how it pans out?
Well, it all depends on who you are, and if you're an investor that's never been short, you shouldn't be shorting. As a professional trader, I'm going to try and figure out the right setup. I was talking to a friend on my way in. If someone had to kidnap me for the rest of August and said you have to be long or short, I would be short right here around this 1270, and I do think within the next 2-3 weeks, I put about a 70-75% chance we get to that 1220 number. But I have to be here and trade along the way with the gyrations, but I'm going to try and be more net short than long.
All right, fair enough.